Pretty much back with another one. We're going to go over what trade we took and how you could have executed on that. So coming into the day, we took a trade on GU. I looked around the board and I pretty much couldn't see any solid execution points as far as GU and GJ. Sorry, gold and GU. So what we notice here is that GU is what? We need to know our daily buys coming into the day, right? We obviously know that GU seems to be trending bearish at this point in time, and we probably expect it to go a little bit lower on the daily. We know that. Good to know, though. So at that point, I'm thinking, okay, I'd like to be bearish on the day, but what can I see on the lower time frames? On the lower time frames, I see a reaction off of this fair value gap, right? Sorry, off of this order block that led lower. And price failed to break structure here. In fact, we actually changed character to the upside, at which point I was like, okay, we may be bearish on the daily and we're probably going to head on lower. But odds are this means that this move is going to be a inducement move to induce more liquidity and take out at least major price areas at which there's lots of liquidity. For example, the previous week's high. We take the previous week high, we break hourly structure, you're pretty much good to go short for the week if your biases are in line. At this point, I actually might even enter a swing trade on this pretty much hourly close to target, a lot lower, probably somewhere within here, or at the very least here. So how do we do this? So knowing that this 4-hour structure is bullish at this point in time at New York Open, and I know that I'm anticipating a break of structure to the downside, but what can I say? What trade is available to me right now is the question. So when I ask myself that, I want to get down to a little bit lower. I know that the daily is bearish, but the 4-hour is currently bullish, and the 4-hour being bullish is likely just going to be a move to induce more buyers before we go lower. So I need to know where those buyers will get either one induced and where the sellers are going to get taken out. So what does that mean? I know that there are people that are going to be selling off of this price area, which is going to be the order block before this move down, thinking that this was the liquidity sweep. So I know that because we already have the reaction here. But the failure to break hourly structure here shows that there's lack of strength, especially after 1 hour of the New York Open. When you close at 8 a.m., if you close like this and you didn't even break hourly structure, that goes to signal liquidity sweep. And guess what? Better yet, we still have news coming out at 10 a.m. and New York Stock Exchange opens. Odds are these sellers here are going to be a bunch of chump change and are just going to get taken out. So what happens? We scale down a little bit more. I know that my hourly is bullish still because we saw this liquidity sweep that I just showed you guys. I know that the 4-hour is bullish. And I also know that we're doing a model at which this model plays out a lot actually. We start to see a model where we have the buildup and then we have the move which induces people in the wrong direction, and then we head on to take liquidity or just continue with the trend direction, which is this right here. You can see the buildup clearly. We take that out. It's a third one. There's a third leg in there, but whatever. Only to go higher. This model happens on all time frames and it really does occur a lot. It's probably another one of these in here, but this is just the buildup before we head out. This is the major price discounted area and accumulation area that occurred before, and usually that gets mitigated before we head on higher. At which point, I noticed this at 9 a.m. We come and induce the 15-minute order block that caused this expansionary move to the upside. At which point, I'm like, okay, isn't my good to long at this point? I said, no, I need to wait for further confluences. Like what? The invalidation of bear structure on the lower time frames or slightly higher time frames in the 1 minute. So that would be the 5 minute at this point, at which I saw the reaction. And then I just said, okay, I know that we're doing the same thing that we did that I just explained to you on the lower time frames, right? Look at this. We have the mitigation, the buildup, the reaction off of a bearish price array, and then come back into an efficiency or an accumulation area, only to go ahead and invalidate that and head on higher. People are doing what right here? They're shorting. Buyers are what? They're getting stopped out. Make sense? And at that point, when I see this break of structure, had I known that this was a break of structure, I probably would have longed it here, but I was on my phone at that point. So I was like, oh, this is not a break of structure. Let me just wait for this next candle to close. Waited for that to close, put my stops under it, and targeted this and this. I could have targeted a little bit higher, but I'm very satisfied on the execution. News came in and pretty much hit that final target, which I was still debating if I was going to put or not. This was going to be the ideal trade for me, which is not a bad trade, but we took a little bit less of a trade, but ultimately we hit all take profits. We had 2, and we secured a proper 4-hour day. We'll take that 1-0 on the week. Join the